Let's turn now to the latest business news and an important meeting of shareholders at the carmaker Nissan. Back with us in studio is our business editor, Stephen Carroll, to bring us all the details. Stephen, welcome back and tell us more.
Thanks very much, Eve. This is the first regular annual meeting of shareholders at Nissan since the scandal engulfed the company's former chairman, Ghosn. Shareholders have been voting on changes to how the company is run. Among other measures, they approved a new system of oversight committees and keeping the CEO Hiroto Saikawa on Nissan's board. He says that autonomy remains an important goal for the carmaker, but vowed to keep working with Renault's chairman to maintain the alliance between the firms. Peter O'Brien has the details.
A bow of regret as Nissan executives say sorry.
On behalf of the company, I would like to apologize deeply to our shareholders for the financial misconduct and the serious wrongdoing by our former executives last year.
It's the Japanese automaker's first general shareholder meeting since former chairman Ghosn was arrested. Amid tumbling profits, shareholders arrived with questions and concerns.
I'd like to hear whether they'll rebuild the company.
I want to know when the situation will be worked out and when the company can make us feel safe as shareholders.
At the meeting, investors approved a new governance structure with committees to oversee pay, board nominations and auditing. They've also voted to keep CEO Hiroto Saikawa on the board. Saikawa, Ghosn's protege, said he was responsible for the poor financial performance, but also for building a new future for the company. He also wants to work with Renault chairman Jean-Dominique Senard on shoring up the strained alliance between the carmakers. Nissan promises that after another year of shaky results, they'll begin to recover. Meanwhile, the man who was at the helm for 2 decades still awaits trial on charges of financial misconduct. Ghosn maintains he's innocent.
Beijing and Washington have been talking about their trade dispute ahead of expected face-to-face meetings later this week. Chinese Vice Premier Liu He spoke by phone with the US Trade Representative Robert Lighthizer and Treasury Secretary Steven Mnuchin. We didn't get any detail about what they had discussed, but it comes ahead of an anticipated meeting between Donald Trump and Xi Jinping on the sidelines of the G20 in the coming days. Investors are hoping for progress after both sides imposed new import tariffs last month. The news of that phone call not encouraging enough to boost shares in Asian trading today. Shanghai and Hong Kong both finishing the day down fairly significantly. In Japan, we were keeping an eye on Nissan shares as that shareholders meeting wraps up. They were down around 1/3 of 1%. On the European markets today, we've got shares starting in the red as well. Carmakers leading the falls. London, Paris and Frankfurt all down by about 0.5%. In Paris, shares in Renault down around 1.5%. Of course, investors there also watching the latest coming out of that Nissan meeting in Japan. Turning next to a call from a group of billionaires for the United States to tax them more. It's a letter signed by 18 of the richest people in America, including the co-founder of Facebook, Chris Hughes, and hedge fund manager George Soros. They're calling for a moderate tax on assets of the wealthiest 0.1% of people in the US. They say the money raised could help address the climate crisis and improve the economy. Now, the signatories say it's not a partisan call, but note that several of the candidates for the Democratic nomination for next year's presidential election have suggested a form of this tax. This is the letter as published online. The signatories say it's not in our interest to advocate for this tax if their interests are being narrowly interpreted, but the wealth tax is in our interest as Americans. Well, finally, for me, it seems the sizzle is going out of the hottest new company on Wall Street. The vegan burger company Beyond Meat saw its shares more than double in value since its first day of trading last month. Its sales more than tripled in the first 3 months of this year. But perhaps investors beginning to lose their initial taste for the product. Shares in the company slumping by more than 8% on Wall Street on Monday. That's the 5th consecutive day of falls. But that closing price of just under $141, when you think that their list price was just $25 when they went to market, there's clearly a big appetite for this company. Eve.
OK, nice to have that positive end to it. Stephen, Carl, thanks a lot for that business update.